Well, let's get some more on all of this. We're joined now by Chris Weston from IG Markets in Melbourne. And Chris, what did you think? Was it just a bit of a pause after the recent strong rally overnight?
Yeah, I think people are a little bit of reflection. I think anyone who's getting overly optimistic about the ECB buying bonds, which I think will happen at some stage, it's just not going to happen anytime soon. I mean, Spain have got no real requirements to be coming back into the bond market and actually auction to raise funds for its deficit until October, so that's not a major concern for them right now. The other issue is, you know, we don't have there's an EU finance ministers meeting in about 4 weeks' time, and then there's another summit in about 6 weeks' time. So I think they'll wait until after those summits until we get a bit more clarity. I don't think we're going to see them actually coming out and tapping a bailout anytime soon. Hence why I think we're going to get this kind of anyone position themselves for immediate requests for funds by Spain are going to be slightly disappointed, and hence why I think we're going to still see a bit of a range in the euro. So I think, you know, there wasn't a huge amount of headline risk last night. People talking about the German industrial production numbers, they were down about 0.8%, a little bit worse than expected. And I think it's pretty clear that the slowdown we're seeing in peripheral Europe is now fully affecting the core and semi-core as well. So I think that's a bit of an issue. The Bank of England were quite downbeat, but that was largely priced into markets. In fact, we actually saw a pretty strong rally in sterling once we actually saw the facts coming out. And I think the fact is that you know, Mervyn King didn't give any hints that we were going to see rate cuts in the near term, which I think the market was positioned for, more stimulus in the form of quantitative easing of buying gilts. That doesn't seem like it's on the table anytime soon, hence why we saw that big rally. Notably, euro sterling runs under quite a bit of pressure. So tight ranges seen in all asset classes last night. If you look at the Spanish 2-year, which now is considered by many a big proxy of how other risk assets are going to trade, that was up effectively 2 basis points. The Italian 2-year and 10-year very much unchanged. I think the other story which you can look at, which is starting to get a bit more traction, is what's happening in the US Treasury market. The US Treasuries were up about 6 or 7 basis points last night. They have broken through the March downtrend. It looks like some of that money is starting to feed its way out of Treasuries and is starting to make its way back into the equity market. And the equity market pretty much unchanged and hasn't really given us too much of a focus today. So there is a lot of data in Asia to focus on today. So we're kind of blessed with this other situation, which we're not used to at the moment here in Asia, where, you know, we're factoring in a big lead from Wall Street or European markets, and then there hasn't been much to reflect on in Asia. The other complete polar opposite is true today, where we haven't got the lead, but we've got a lot of information to digest in Asia, so there could be a bit more volatility here.
And Chris, just to let you know and viewers know that we're just starting to get through the headlines through from that Telstra annual report as well. Full year net profit coming in at $3.4 billion, and looking at the final dividends, that's 14 cents. We know that Telstra has said that it wants to keep the full year dividend around that 28-cent mark and has pledged to maintain that through FY 2013 as well. Only just a few headlines at the moment. The report's obviously just dropped to the ASX now. The initial thoughts though, Chris?
Yeah, I think if 3.5 was the consensus, so perhaps just a touch miss. But you know, if anything like Telstra, you've got to look at the mobile division. Now, mobile division, they've actually been winning quite a few contracts at the expense of Vodafone of late. You know, I think that's going to be something. I think the mobile margin should improve marginally to about 35% as well. So looking very closely at that mobile division, I think that's going to be a key source of increase coming through. He's looking for about mobile customers about 1.66 billion. But I think, you know, you've got to look at the EBITDA numbers as well. I think the full year EBITDA should be around about 10.35, taking the total revenue to about just over 25 billion, which is about a 1.1% increase. But the net profit numbers you just read out, pretty much in line with expectations. The dividend, of course, I'd be very, you know, was 14 cents. That's what everyone was expecting. I would have been very surprised if that had been deviated from consensus in any shape or form. Of course, there's a lot to look out for, and you know, we've got to see at the same time, is the quality of this earnings justifying the rally that we've seen? And like UBS said yesterday, this stock has outperformed the XJ over the last 6 months or so by 60%, hence why they downgraded the stock yesterday. So a lot to live up for, but you know, there's in a market which has been very fearful, obviously plenty of reasons to have liked Telstra as well.
Yeah, look, we're just trying to get into those results in a bit more detail, but thank you for those initial thoughts. And just to let viewers know as well that we will be dipping in and having a little bit of a listen at the initial initial analyst briefing given by Telstra. That should be in just under an hour's time. Obviously we'll be watching that very closely.
Just one more fact.
Yes, sorry, Chris. Yeah.
Just one more point as well. I mean, I think the outlook guidance for these guys are obviously going to be very important. Remember, everyone's still maintaining that they're going to have that dividend going forward for the next couple of years, which I think is very, I'll be highly surprised if we saw them deviate off that. But look at the EPS growth for this full year coming into 2013. The market's still looking for about 3% EPS growth. So we need to see that being justified as well. 3% EPS growth there.
Absolutely. Chris, just as well, I mean, we've seen Telstra shares rising, obviously, in this search for yield and going above that $4 mark, and a raft of brokers coming out and saying, well, I think Goldman Sachs saying, you know, it's the biggest sell in the market above $4. It's just below that at the moment. But, I mean, what do you think of those kinds of comments, you know, with Telstra going so, moving so strongly?
Well, I think that there's merit, but I think, you know, when you're an analyst and you're looking purely at valuation, then you know, I think that there's other factors in play as well. You know, you can make an argument that the Australian dollar is very much overvalued from a purchasing power parity basis, which would be very much from a fundamental perspective from that side of things. But there's a lot of other things that feed into that. Now, if you're looking in a situation where volatility is extremely low right now, you can look at the Aussie VIX, you can look at the US VIX, you can look at currency volatility. Having a market which is having a slight trend upwards, which is obviously what we're doing with low volatility, the hunt for yield is still a very compelling place to be. You start seeing this shift back into growth stocks, cyclical stocks, which is what we've been seeing. So it's, you know, you can say Telstra is probably overvalued from a valuation perspective, and we've hit a lot of price targets now in the stock. But at the same time, when you can get paid, I think probably their dividend yields come down quite substantially now, probably about 6-7%. It's still quite a compelling place to be, that you can be paid to be in a stock that's trending, you know, either sideways or if not marginally higher. So, you know, that's what people are to be looking for. So the dips will be still quite shallow on Telstra, unless we hear something very, very negative from this result, which says changes the investment case for the company. Yeah,
just some more headlines we're getting. Telstra forecasting low single-digit total income and EBITDA growth in FY13, expecting 4.75 billion to 5.25 billion in free cash flow in FY13 as well. We'll keep an eye on that one. Thank you so much for those initial thoughts, Chris. Just quickly as well, wanted to ask you about the local data, jobs data due out today. What are your expectations, and is that going to have quite an impact, do you think, on the Aussie?
I mean, the Aussie's done a pretty good job, or the market's done a pretty good job of factoring out rate cuts. We're sitting around about 57 basis points now for a 12-month cycle. I think that we've probably done quite well in squeezing that out. The jobs number will, of course, throw some modest volatility. It's a lottery. It's an absolute lottery how this comes out. The consensus, yet again, is 10,000. Lloyd's, for some reason, have crept into the mix. They've got they're looking for 24,000 on the top side. Then you've got AMP on the downside. I think they're looking for about 10,000 losses. So it could come out anywhere. The number always comes out above or beyond the top end or the bottom end of the range. So yeah, I think that could throw some sort of heightened sense about what's going to happen with the Aussie. I'm looking very closely at China, bang in line with what we've been seeing with the comments from the RBA. Last night, what we saw from RIO, that Chinese growth has started to stabilise and demand should pick up. Electricity output is starting to pick up at the moment. That's a leading indicator for the Australian dollar. If you look at the correlation between the Australian dollar and electrical demand in China, there's been a very strong correlation there. So I think what we're seeing, the anecdotal evidence is that China has bottomed. The RBA mentioned Xstrata, all these big mining companies now. So I think you can start looking at this data in China, probably slightly more optimistic eyes, looking at fixed asset investment, looking at the retail sales numbers today. Looking for a good gain in RIO today. That was a great result, great commentary from these guys. Probably not such a good day for News Corp today. Should be down about 2 to 3%. Had a massive run, so I think probably taking a few bit off the table given the disappointing revenue numbers today. Right,
okay. Just quickly on that News Corp result, if I could ask you, Chris, seeing these write-downs, given it's trying to spin off its publishing business from its entertainment media business, what did you think of those final numbers? Coming in there with sales obviously down about 6.6% for the fourth quarter?
Yeah, well, I think there's going to be a lot of people talking about the fact they've swung to a net loss of 64 cents. Now, don't look at that at all. I mean, the impairment charges were well flagged by the market, the 2.8 billion because of the operations, the Australia, the write-downs, the impairment, the goodwill that's been taken there. You've got to look at the adjusted EPS at 32 cents. That was bang in line with the market. Slowed down from 35 cents in the previous corresponding period, but it was bang in line. The revenue numbers were probably, as you say, they're down 6.6%. They're about 4 or 5% below what the market was looking for. So if you're looking for a negative in this result, you've got to look at the revenue numbers. That's where the disappointment's going to be made by the analysts, and that's why the market will probably see the stock off. But cable division, very, very strong as we'd expected. 25% operating growth coming through there. The ad market is really strong for these guys. If you look at the international ad market revenues, up 18% or so. Domestic ones up about 5%. This is a business right now which is not a cyclical business. This is more a structural business. People, rather than most media companies which are cyclical businesses, this is actually a structural business, and this is why people like this stock so much and why it's been up 26%, and that's why we could be a little bit disappointed today. But TV, a little bit disappointing. I think the publishing obviously fell pretty hard out of bed, down about 49%, and I think filmed was down quite hard as well, but that came off a very strong quarter in the previous corresponding period, but it was above the market's expectation. The other thing, Chase Carey came out with some really positive comments talking about first quarter ad revenue being strong. They talked about high single-digit EPS growth to low double-digit EPS growth. So I think that's in line with the expectations of the market. But the ad revenue is really strong, and again, you've got to look at the cable side of things. This business is on fire at the moment, and a year till the separation comes through. That's when we're going to be seeing coming through. But I'll be buying this company on a dip, and a decent pullback, 5–10%, and I'll be happy to own this company again.
Chris, really appreciate your thoughts. Thank you so much for that.
Thanks, Bridie.
Chris Weston there from